use this Bitcoin 15-minute chart to show you a very specific strat setup that I look for all the time. The failed 2-down reversal. And more importantly, I want to show you exactly where I enter the trade and place my stop loss. First, look at the context. Bitcoin is clearly moving higher, and we're operating in a bullish environment. Ideally, I want full time frame continuity to the upside. But at the very least, I want to know that the daily candle, or my relevant higher time frame print, is green. And this is where that be patient, annotation on the chart comes into play. If my higher time frame is already green, I don't want to chase lower time frame green candles straight up. I'm waiting for the lower time frame to turn down. I want to see some red, some 2-down action come against that bullish higher time frame move. That's the patience part. The higher time frame is telling me the direction I'm interested in, but I'm waiting for the lower time frame to give me the pullback and potentially the reversal setup. So I'm not chasing the move. I'm waiting for the lower time frame to come back to me. And that's exactly what happens here. After this move higher, Bitcoin pulls back and gives us a 2-down. Remember what a 2-down means. Price has taken out the low of the previous candle. So now the lower time frame is moving down against that green higher time frame environment. This is what I was waiting for. But I'm still not automatically buying anything. Now I want to see whether that downside move can actually continue. In this case, it doesn't. The 2-down fails. And that's where the setup gets interesting. But this is important. I am not buying the failed 2-down candle. This candle must close. I'm waiting for the next candle. Here's the actual trade. Once I have my closed failed 2-down candle, I identify the high of that candle. Then I wait. If the next candle breaks the high of the failed 2D, that's my long trigger. That's the entry. So the sequence is very simple. We have a green higher time frame. I wait for the lower time frame to print down. We get the 2-down move. The 2-down move fails, resulting in a failed 2-down closed candle print. Then the next candle takes out the high of that failed 2-down. That's the trigger. That's the long. Risk management is just as straightforward. If I'm entering on the break of the failed 2-down high, my stop goes approximately 1 or 2 ticks below the low of the failed 2-down candle. This is your decision to make based on your risk tolerance. So now I have a very clearly defined trade. My entry is above the closed failed 2-down candle. My risk is below the closed failed 2-down candle. If price comes back and takes out that low, then the setup didn't work. I'm out. No sense arguing with the market. And look what happens in this example. The next candle triggers the failed 2-down by taking its high. From there, Bitcoin starts working higher. And now we're back to moving in the direction we wanted in the first place. Upside in a bullish higher time frame environment. That's what makes this setup attractive to me. I'm allowing the lower time frame to move against the higher time frame direction first. I'm waiting for that downward move. Here is where patience is paramount. Wait for the failure. Then, when that downside attempt fails, I make the market prove that it's turning back up by taking the failed 2 downs high. Then I enter.